Beyond what I'm doing in the stock market, I have a couple of other areas where I'm putting some funds. One, which is pretty cool, is Acorns. And Acorns is like, I used to pay with cash and get change, and at the end of the day I would put that change in a jar and it would just pile up, and then I would take it to the bank, deposit it, and put it into my savings account. So it would build up every once in a while, enough to where I'd go take it in. Acorns is kind of like that, except what they'll do is, we're in the digital world, so they'll check your account, and if you've spent money and you didn't spend an even amount, it'll round up to the nearest dollar, and it'll just sweep that into a brokerage account. And that's called Acorns. And you can also give them a little bit each month. You can also send in a little bit each month. So what I'm doing is, I was putting in $5 a week along with all of my extra rounded up change. And I've got a pretty good return on it. I started doing this last year. I just last month upped it to $10 a week instead of $5. But I'm at 25% return. 24.73% return after the cost. So that's pretty impressive, and that's not something that I've had to worry about. You know, it's like, this is money that I would normally not even pay much attention to. So it's a neat little place to save up, kind of out of the way of your normal trading. So I wanted to share with you my referral link, because if you're interested in doing it, you should check it out. You can also set these up for your kids. There's a early for kids account on here. You can set up your retirement account in here if you wanted to. A lot of different ways you can do it. So I'm going to put this in my chat. I'm going to put the referral link in the chat here. Give me just a minute. And if you're interested, check it out. Link is posted in the chat. So if you're interested in that, check it out. Like I said, over the last year, I'm up 25%. And it held back when the market started coming down on all of our Tesla and all the growth stocks we've been playing around in. You know, we down day after day after day. That thing was at 20% gains. It didn't dip when everything else dipped. I was pretty impressed by that. Pretty impressed. And it also illustrated the need to have a little bit of diversification. You know, I love having money in there that I can trade with, because I think there's a lot that I can do with it and I can get a good return. But I also like having one that I can look to if I'm having a challenging time in the market. I can also have something else that's performing pretty good. So check out that link. Let me know what you think. Now, the 7702 changes. What that does is, for whole life policies, it changes the guarantees. No longer going to be a 4% guarantee. The highest the guarantee can be is 3.75. The lowest it can be now is 2%. So currently we have 4% guarantees across the board. That's the high and the low. But a lot of insurance companies, it made it a challenge for them. Now, the major carriers that I deal with, Guardian, Mass Mutual, Penn Mutual, they've all paid out dividends higher than 5%. So well over that 4% guarantee. So it doesn't really impact them. Like, they shouldn't have to change their products, but they're going to have to, because they're no longer going to be able to offer that 4% guarantee. It'll be 3.75. The new rules will also allow more cash value to be contributed with a lower death benefit. So it's possible that we could get a little bit more cash growth in the policy. Now, I'm not too concerned about those changes, because for the most part, we're going with whole life because we actually want those higher guarantees. I don't know that we would necessarily do a whole life policy and be happy with just having a 2% guarantee. Depends. Depends on the carrier you're going with, right? Because there's some carriers out there that their current dividend rates are terrible. They're like 3%. Meanwhile, Guardian, Mass Mutual, Penn Mutual, all up around 6%. So you're going to have to, you as the client, you as the customer, trying to find a product out there that's going to work good for you. You don't necessarily want to just go with whatever the illustration numbers are going to show, because that lower guarantee If it's a carrier that might be susceptible to paying out lower dividends, that can make a big difference. Can take a hit. So it's something that we'll be paying attention to. I'll definitely share with you guys what I find out. As far as IULs go, the 7702 will probably help in that regard because we'll be able to contribute more for the death benefit. It also instituted some changes with the CVAT, making that a little bit more attractive. Now the CVAT is a way that we determine the MEC limit. We've got the cash value assessment test, which is the CVAT, and we have the Guideline premium test. I design policies with the Guideline premium test because it's way more efficient. We don't need as much death benefit throughout the whole life of the policy. And so we end up with much, much higher cash values down the road. With the CVAT, you have to have a higher death benefit throughout the life of the policy. Well, with this new 7702 change, it doesn't require as high of a death benefit. You still have to have a higher death benefit. So I imagine I'm probably still going to keep the Guideline premium test designs. But who knows? I'm going to have to check it out. I'm going to as usual, I let the numbers decide. I'm not just going to guess and stick to it because that's what's always worked in the past. That's how I've always designed it. No, we're going to take a look at it. We'll see what the designs tell us, and we'll let the numbers decide. So hopefully that answered your question well.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.